Hey friends, welcome to the channel. I'm Jason. I paid off my mortgage early in just 11 years, at the age of 38. I did this to be financially free and to retire early. In today's video, I'm going to tell you exactly how I did it and how anyone with the same discipline and determination can do it too. Now, before you assume that I must have been making six figures, or that I hit the crypto jackpot, or that I had some big inheritance, let me assure you, none of those is the case. See, the fact is, I did it the old-fashioned way, the same way that your grandparents would have done it, with hard work and disciplined savings. When I bought my house, my salary was around $40,000, and over time, through promotions and company acquisition, my income peaked at only around $80,000. But overall, I would say that probably my salary averaged about $55,000 a year during my whole career. And during this time, sure, I lived frugally, but not so much that I was eating rice and beans every day, so nothing crazy. See, I still enjoyed my life. The key was that I was saving aggressively and making smart choices about my finances and investments. When I bought my house, the original mortgage was about $120,000, and the interest rate, from what I recall, was 5.65% on a 30-year fixed loan. My monthly payment, including principal, interest, taxes, and insurance, was around $800 a month. Totally manageable considering that I had no other debt. I've never liked the idea of being in debt, so I always knew that I wanted to pay off the mortgage as early as possible. I just didn't know how to do it at first. And then at some point, I realized that if I paid just a little bit extra every month, I could basically mimic a 15-year mortgage schedule. And that's basically what became my biggest strategy. I started paying an extra $100 a month, then $200 a month, and as my salary increased, I eventually got up to paying an extra $500 a month. Instead of letting the whole payment go just to the interest, I focused on the principal balance. And let me tell you, it felt amazing seeing that number go down month after month. Most people, when their income increases, give into what's known as lifestyle creep. That's where you spend more as you make more. Trust me, there were plenty of opportunities for me to spend my money, but I resisted the urge to buy a new car or splurge on other unnecessary things. Seeing that principal balance shrink every month is what kept me motivated. And so fast forward to around year 7 or so, my mortgage balance dropped to around $65,000. I had been keeping an eye on refinancing rates, and I came across an opportunity that was too good to pass up. While technically not a mortgage refinance, I took out a 15-year home equity loan at a super low rate of just 2%. And I can remember it costing me about $800 or $900 to get this set up. It also had no early payment penalties. I took the money from that loan and used it to pay off the original mortgage. With the new loan, my monthly payment went from $800 to $1,100. But remember, I was already paying more than the required payment, so this didn't really bother me at all. Now, throughout this process, I also didn't forget about my future. I was still maxing out my 401k at work, my IRA outside of work, and putting whatever was left over into a brokerage account for even further investing. I was saving roughly 70% of my income, I would say. And yeah, I know I can already hear some of you out there moaning. I did live frugally. But again, not so much that I didn't have a good quality of life. I still did enjoy my life. I did the things that I wanted to do, but what I didn't do was spend on the things that most other people do. That meant that there was little to no dining out, no new car, no expensive vacations, no fancy clothes. And honestly, I'm so glad that I wasn't like most other people, because in 2008, I was laid off from my job during the Great Recession. But I still had the monthly payment to make like everybody else. Now, thankfully, I had a decent severance and a solid emergency fund built up. There were many other people out there who were laid off who couldn't make those payments, and yeah, they lost their houses. I was able to ride out the storm until I found a new job. Also, during the time of being laid off, I realized that I wanted a different lifestyle. I wanted to be free and to travel. But in order to do that, I had to get rid of the big loan payment. So after 11 total years of paying interest on my house, that's exactly what I did. I paid off the home equity loan early with one final lump sum. At this point, I was 100% debt free, and I have been ever since. So what do you think? Was paying off the loan with a 2% interest rate a bad idea? Let me know your thoughts in the comments. So here's what I want you to take away from my story. You don't need to make a huge salary to pay off your mortgage early or to achieve financial independence and retire early. You just need to be diligent with your savings and consistent with your investing. That's how I paid off my mortgage early. If I can do it, so can you. The keys are to focus on your goals, resist lifestyle creep, and make smart financial choices. So if you enjoyed this video, make sure you give it a thumbs up and consider subscribing. Thanks for watching, and check out this other video over here for more tips on achieving financial independence. See you in the next video.